Hello friends, thanks for joining me again. A couple of weeks ago, I saw an article saying that coal prices had increased considerably. It sparked a little period of investigation for me. I have a bit of a favourite coal stock. This is New Hope Corporation. So I brought the chart up to have a look, and this is what I was presented with. Now straight away, this was interesting. This looks like a period of accumulation. In particular, this bar here on pretty high volume, one of the highest volumes for quite a long time, either the highest or the second highest, until you go back to this bar here. And the interesting thing here was that price had been on the decline, price had been moving lower, and volume increased here, and price did not break down in response. It did close lower the next day, but within the range of the previous bar, and then the bar following that was up. Then you had a little shakeout sort of bar with the next bar being up. Now, let's just go back and have a look. Sometimes you really have to pay attention to what didn't happen. I've got a video on that, which you should watch, because sometimes making note of what didn't happen is just as important as understanding what did happen. Price was on the decline here, yet with the highest volume of that whole decline, price didn't go down any further, and then the following bar was up. Price did not break down in response to very high volume. Really, like, it's above average by quite a bit. It had to be some buying came in there, with the next bar being up, then a little shakeout, and the next bar up, and a test, and the remainder of these bars were likely just some accumulation. You can see volumes became lower and lower for the most part down here, but this was just some sort of accumulation, mopping up supply, and then price gaps out and over the important level, which was here. This is the market showing intent. The gap out is encouraging anyone who is still holding over here to stay in the market and not sell into a breakout, because that makes it more difficult for those who are encouraging price to break out. So if anyone was still holding, this is trying to encourage them not to sell. This is the market showing intent. It's a gap out and over the important level, and it also confirms this level is important. Otherwise, they wouldn't have gapped that far. So anyway, this is where I saw the chart anyway at this point. It was over a weekend, if I remember rightly. And my thoughts were, this was some form of accumulation. There was a lovely gap out here. Price pushed up to this level here. We've had a pullback to see if there was much supply in the market, and it remained relatively low. This was half a test. There was testing in the bottom, and a little bit at the top was probably a bit of over-enthusiasm in the market, and then a push back up to resistance. Since that happened, this is what happened with the stock. You've got a test, a shakeout of some funny description, another test. You have a gap out here and a mid-bar close, which is probably some supply being drawn out from the left, stale holders over here wanting to get out at break even, who had been locked in when price fell, and they were just getting out for break even. So you'd normally see some testing in response to that, but no, only some very minor testing below the previous close. There would have been a little test there in the morning, but the market's really strong. and price rockets out. That was an attempt to test, but this market really is strong. Price continues higher. Tiny gap off the previous close and continues higher. Price continues higher again. And that was Friday. That was this Friday. Now, one thing to note here is when you see price moving higher like this, whether it's on a deliberate basis or whether it's organic in the market, you really want to see expanding spreads and volumes as price moves higher and contracting spreads and volumes as price moves lower. That is, as price moves higher, you want to see volumes increase and spreads increase. And when price pulls back to test for supply, you want to see volumes reduce and spread reduce. That's the ideal situation. You can see this was the breakout bar, and you always will get high volume on that because the market needs to overcome any sellers as price had come down. That's almost a bit excessive, but you always want to see price explode out of the blocks. The gap here shows intent, and then the market blasts higher with high volume to absorb all of the supply drawn out by the breakout. This is what I would call an absorption bar. Price just sits there in the market and absorbs the supply. Now, sometimes you'll see the price come back in response, but this market was hot and there was no pullback and then acceleration higher. Price just continued higher on an increase in volume. Then price pulls back. Volume's about the same. Here's the little test. It's not a very good test, but it's a test all the same. And you see spread narrowed, volume reduced. Just what you want to see. Price pushes up to the highs of the range and then tests, and on the test, spread narrowed, volume reduced. This was a bit like a shakeout here. It's a bit of an awkward looking one you wouldn't generally see, but it drew out supply, so the market tests in response the next day, spread reduces, volume reduces. Perfect. Volume increases, price gaps out above the highs of this little range and accelerates higher. And it's trying to go past anyone stuck over here, and that's probably why there's a mid-bar close. Now, there would have been a little bit of testing in here. This is almost like a breakout bar, and this had a little bit of testing, and the market was just so strong it continued higher. There was some testing in this bar, spread narrowed, and volume reduced. Now, as price accelerated over the next 3 days, you see volumes are all increasing. And then on the final day of this week, you can see that below the previous close, there would have been some testing, which probably accounts for the reduction in volume. But spread has narrowed a bit, so you would expect some sort of testing next week. You really would. Like, it's really exploded out of the blocks. Just how far it comes back, I'm not sure. But this was a good example of price expanding on spread and volume as price moves higher and contracting when price moves lower. This is the ideal situation and just what you want to see following a breakout. Now, I won't be surprised if price comes back a little next week. It probably should, but that doesn't mean it will. And just finally, when you see expanding volumes on up bars and contracting volumes on down bars, they don't have to continue each time expanding further. So you don't expect, following a test, you don't expect volumes to be expanding from where they were before. They expand from the test onwards. So there was some testing on this bar and volume was quite low. You can see that the next bar saw increased volume. That's what you want to see. It doesn't necessarily have to be higher than the previous volumes. It just has to be higher than the test volume. It's like it resets at that point and then continues higher. And then there's a test, price resets and then continues higher. So you're not looking for ever increasing volumes, otherwise it would soon get to a point where the volumes would be excessive, and then you'd have to be concerned about supply coming into the market. So anyway, that was an interesting pickup from 2 weeks back. There's little doubt there was some accumulation taking place down here. The gap up above the highs of the range, or the important breakout level, showed intent. And price was way too strong to come back and test the breakout like it sometimes would. Instead, it pushed much higher and then went through its testing at a higher level. This was just another sign that the market was very strong. You find about 50% of the time the market will actually test the breakout itself before taking off or failing. This market was strong. Then you saw another little gap out here above this high of the range where the testing took place. This was actually a bit more like bullish absorption here. I've got a video on that if you want to have a look. And then price continued higher all this week. But spreads have narrowed the last 2 days, so I wouldn't be surprised at all to see some sort of consolidation taking place next week. Okay, the other chart was light crude. I was watching a Oscar video on YouTube, and I don't know if you watch Oscar, he's pretty full on, but I was watching an Oscar video and I saw this, because I normally look at the weekly chart of this. I saw a breakdown bar, a bar that didn't continue lower, a buying bar, and then a breakout above the high of the initial down bar. And I won't say what that is yet, hopefully you know by now, but if we pull back a little bit, you can see there's a previous high in the background. You can see the price attempted to push above the previous high a number of times, and it really struggled to do so. And when markets find it difficult at a certain level, they'll often pull back and shake out to challenge the sellers in the market to come out and spit their supply out and get rid of them, remove their supply, which will then allow the market to push higher in response. And just here, we had a lovely example of a 4 bar shakeout, which really is a good example, almost textbook example, of a bullish reversal. Following that, 2 days of testing, possibly 3 days of testing, an absorption bar, a push out with a mid-bar close, and then a push back up to the highs of the range. If I mark that in again, there's your reversal. That's the completion bar where it pushes above the high of the initial down bar. Here's the previous highs in the background. You can see this was like bullish absorption here. The market absorbing supply as it grinds its way through that level after having done a 4 bar shakeout, or a shakeout over 4 days, however you want to look at it. And this looks, although it's incomplete at the moment, suspiciously like another period of bullish absorption. This was a bullish reversal. These look like bullish absorption. This looks like light crude is going to go higher. We'll have to wait and see, but I just thought it was interesting. I don't actually follow this chart in particular. I follow the weekly light crude chart, but just having seen it on someone else's channel, I could see straight away this bullish reversal here and the little period of absorption in response as it moves past the previous highs. I thought that was really a good principle to see. You just need to look for these principles on the chart and understand what's happening and why, and then you can make an informed decision on whether you want to trade that or not. Okay, that's my lot. Hopefully that was worthwhile and you enjoyed it. Let me know in the comments if you did. Thanks for joining me again. See ya.